All right, this is a lecture on 113, the course 113, the entrepreneurship course, accounting for entrepreneurs. This is the third portion of the course, and I didn't plan on this, but I think this should be really the introductory lecture. I'm going to do a problem, and I'm not going to go in the order. I published and put on Moodle a schedule, and I'm not going to follow that schedule. I will do everything on that schedule, but I'm just going to shift things in a different order that I think will make more sense. Anyway, this would be the introduction to that chapter. And again, we're talking about part 3 of the course. It's on liabilities. And you might say, well, why are we going over liabilities? Well, really, we're not going to go over all liabilities. There's lots of liabilities. That's when you owe people money. But we're really going to be focusing on, for a small business person, an entrepreneur, if you have any kind of business and you have any kind of employees, you're going to have payroll and payroll taxes and sales tax. We're going to cover in here interest payable. So think of liabilities. Payroll taxes payable, sales taxes payable, interest payable. I think that really will cover our big hitters. There's a few other small topics in there that I included in the reading, but this will be where you get most of your testing, and our problems in this area is quite detailed and complex. To give you an overall view, it's a difficult area, but every time an employer hires one employee, even for a short period of time, even if it's part-time, there's rules that if you employ an employee for 20 weeks of the year, you have to report all these taxes, payroll taxes. If you hire them even for, a few weeks a year, but part-time, or all of the year for part-time, you're going to probably have to fill out payroll taxes. You won't have to do it for a babysitter, but you would a nanny. Again, anytime you get up to somebody that's working for you regularly and working many days, you'll usually have to again, know about these taxes. First of all, many of you might remember Social Security. Now, when they talk about Social Security, really that tax is, most time you might talk to people and they say, oh, Social Security is 7.65%. And what is it charged on? In other words, you charge tax on what? When you buy something, a sales tax is if you buy a chair or a table, you pay sales tax. This is on the wages people make, the wages you make, and those wages are taxed. And they pull those taxes out of your wages. You're paying them, the employee. Anyway, this is again, back in the 60s, I believe. I think it might have been Johnson that did this, Lyndon Baines Johnson, but I can't remember for sure, but I think it was during his administration. But anyway, they passed a bill called OASDI, Old Age Survivor and Disability Insurance, and they said, you know what we're going to do? We're going to collect 6.2% on everybody's income from $0 to $118,500. So if you make between these two, you're going to pay 6.2%. Now, if you get up to $118,501, the next dollar, $118,501, that next $1 will not be taxed. You see, again, that's the logic. There's a window, an envelope, and you're taxed at 6.2%. But once you break through the threshold, the upper threshold, you don't have to pay tax on that anymore. Now then, later on, Congress went back and passed the HITAA Act. That's the Hospital Insurance Tax Act, and that was Medicare. Because you see, this one gives people what? Retirement money. Money that they can live and pay their bills and get groceries. But this one gives people some security from health insurance. And again, this is funded on all income, 1.45%. You can add these two together, but in many cases you really shouldn't add them together, because you can see, even though it looks like they're on the same base, they're not. If you make $1 million, you've got to pay 1.45% on that $1 million. But if you made like $1 million, you only got to pay 6.2% on the first $118,500. After that, I don't know how much that is, but that's $881,500 that you don't have to pay on. So these are different, and really, they're computed separately. So those are withheld. Social Security is withheld from your paycheck, the employee. But you might not know this. The employer pays it too. Yes. Out of his own pocket or her own pocket. If you work at Dairy Queen withholds this, 7.65% out of every dollar you make. But then Dairy Queen takes it out of their own money And again, Dairy Queen, or I don't know, any of those fast food places, but they take that money and match it, and they pay it out of their own pocket, and they'll match this. So, in other words, the employer and the employee have to pay these both. So in reality, you're at about 15% on every dollar that someone makes is taxed for, again, retirement of that individual. You might wonder why this is running out. Well, it's running out because the federal government took the money and they didn't spend it, they didn't invest it, and set it aside for people's retirement. They blew it on bridges, trains, all of our military, all kinds of spending. They just said, well, let's spend it on whatever we want to. And let's not keep it there and invest it for, again, the actual retirement of people. That's why it's going broke. And by the way, both Republicans and Democrats have done that. It's a shame, really. Now, there's other taxes. The federal income tax, that's paid by you, the individual. State income taxes, that's based on you. And how much do you pay? Well, that is a very complex question because that's specific to each individual. It's based upon your income. If you're high income, you'll pay a higher rate. It's based on the number of children and dependents you have. It's based on other factors. But again, I believe at the beginning, when you get a job, you fill out a W-4. And when you fill out that W-4, it's a form, and they use that form, the government, to guess how much they should withhold from your pay. And then they guess all year long at how much to withhold from your pay based on your W-4. And then at the end of the year, that's why you file a tax return, is because whatever this guess is, it's dead wrong. It's close, but it's still dead wrong. And then it's really what your tax return is a reconciliation. It says, here's all the money that was withheld. Let's see how close you are. If you paid too much, we'll give you a refund. If you paid not enough, you're going to have taxes due. And that's the same for federal and state income taxes. Again, it's based on your income, your number of dependents, your children, and there's other factors they base that on. But this is unique to every individual. You can imagine this is a very complex area for businesses to deal with because they really have to look at every employee as unique and they have to keep track of their payroll taxes individually. So all these in black are withheld. These three, the employee pays. The employee pays these. Now, surprisingly enough, by the way, down here, the employer has to pay these. Surprisingly enough, these are not withheld from your paycheck, but they are taxed on your paycheck, which is kind of a bizarre concept if you think about it. They're taxing something that you're not going to pay. They're going to take your salary, whatever that is, this is a paycheck, your salary, they'll tax it, but they don't make you pay it, they make your employer pay it. So if you make $1, and the taxes, again, the FUTA, that stands for Federal Unemployment Tax Act and State Unemployment Tax Act. But if you make $1, and let's say the rate is 6%, well, again, the 6% will be taxed on your wages, but it's paid by your employer. Your employer doesn't like this. In fact, many people avoid this tax. If you ever have an employer say to you, I'm going to pay you cash, sometimes they call that under the table. I'm going to pay you under the table, meaning I'm not going to fill out the forms necessary to pay all these taxes. Do you see when an employer pays you cash, there's a benefit for your employer? Because your employer is avoiding the FUTA and the SUTA tax, and your employer is avoiding Social Security taxes. So not only do you benefit when you're paid under the table, or again, when you're paid with cash, but your employer benefits because they don't pay those taxes either. Sometimes that happens. It is illegal, without a doubt. It's definitely illegal. But there are people that do it, without a doubt, too. Sometimes it's our elected officials who do it and get caught, because sometimes elected officials have very expensive nannies that work for them, and sometimes the nannies can be paid in cash as opposed to paid with a check. Usually with a check, they're going to be able to track this and find out about it. When I say they, I mean the government. So this is paid by the employer. These are paid by the employee. In addition, these are withheld from your pay, and so are these. But these are electives. These are paid by the employee. But as an employee, you can say, I want to withhold some money for my retirement, for pension. I want you to withhold some money for my health insurance. I want you to withhold some money for charitable contributions to, again, a charity every month. Sometimes they can withhold money for, they can garnish your wages for child support. I want you to withhold money for a health savings account. That's when you pull money out pre-tax and you can basically spend on maybe LASIK surgery or something that isn't, or maybe you want a face job or what do they call that, a facelift, or you want your ears to be lay against your head, I don't know, but plastic surgery. It's not, you can put that in a health savings account and you can use that for, again, health insurance, things that are not paid for by health insurance, normal health insurance. And then you can actually have them pull out money and put it in a savings account. But all these are just elective. That's what's common about these. Elective means you simply, again, elect. You elect to have these withheld. One other thing that I should say, as I said, your employer pays these, but guess what? Your employer also has to match. Again, your employer, let me do it this way. Let's draw an arrow up here. And let's write match, M-A-T-C-H. The employer has to pay this too. So what I'm saying is, see this in green? You, the employee, pay the Social Security, federal income taxes, state income taxes. The employer pays FUTA, SUTA, but then the employer has to match whatever you pay to Social Security taxes, your employer matches. So with that in mind, let's try and start the chapter and actually employ some of these. Usually they're pretty detailed and they actually take a lot of work to do this. Payroll is you know, it's a lot of work to really track employees and their pay and all their withholding and get it all right. Okay, I'm going to stop and set up a problem and then we'll carry on from there. I wanted to say one more thing before I erase the board, and this won't shut down. I turn it on and now I can't get it to go off. I think it stays on because it's cooling down. But I wanted to say this, on FUTA and SUTA, which is paid by the employer, the rate for the federal unemployment is 0.8%. That's really in decimal form, 0.008 to 6%. Well, 6% is actually 0.06. Anyway, on income from 0 to 7,000. Does it make sense that again, if you make $0 to $7,000 and there's a 6% tax, you're going to pay it on every penny. But once again, once you get up and you make 7,001 on the very next, or 2 or 3, on the next $2 or $3 above 7,000, you don't pay this tax. You don't. Do you see that it's probably logical because unemployment in this country is not that bad? Do you see that again, we have billions of people in this country that need Social Security. There's tons of old people. But again, our unemployment rate in this country is not that bad, so they don't need as much money. Now the rates look kind of high, but it's on a very small base. It's only, again, same thing for state, 3 to 7% on income from 0 to 7,000. Once you make it past 7,000, you do not pay this. Another thing is the Fed and the state work together. The Fed and the state work together to administer unemployment. So for example, let's say that in the state, that the federal government knows that the state is requiring every employer to fund it by 7%. Many times then the federal government will say, well, since you're funding it so wonderfully, we'll only charge 0.8%. But let's say it's a state that is not charging anything for unemployment. Then the Fed will say it's 6%. But again, the two work together. If the state is high, the Fed will make it low. If the state is low, the Fed will make it higher. And then there's one other factor involved. The states allow a merit rating. A merit rating means that if you're a company like State Farm and you hardly ever lay anybody off, then they will reduce your state rate. It's called a merit rating. They'll reduce it. What's interesting is if they do reduce it, that doesn't do you any good if the Fed then raises it. But the Fed agrees with the state that if you get a good merit, they also will not tax you on that. So it's a very complex arrangement. And you really have to get into this. We're just going to hit the high tops, the overview of this. But each state is unique. You see it says 3 to 7% for each state. Well, the reason it's 3 to 7% is because in Illinois, it might be 4%. But in Arkansas, it might be 8%. Well, I don't know. It can be higher than that, actually. But the general idea is each state, again, the states have their rights. That was part of the Constitution, and the states want to have the ability to set their own rate. The Fed comes in really And does really, if you think about it, the state's going to set up their unemployment. After they set up their unemployment, the state works with them and says, well, if you're going to have a low unemployment rate, we'll go ahead and, we might have a little higher rate. But again, together they work and they pull in money for unemployment for people. But do remember, these are complex because, like I said, of these thresholds, 118,000 for OASPI. Again, it stops there. 7,000 for FUTA and SUTA. All that you got to put in your head and do those calculations, and it can be somewhat complex, especially for someone who's on the threshold. Let's say that somebody has made 117,000, or let's just make this, somebody made $118,000. Well then, again, if their next paycheck, they're only going to have $500 that'll be exposed to that tax. So it's kind of hard when you get somebody that's right on the threshold of breaking through to the non-tax dollars. And when they're breaking through, you've got to do a little more complex calculation of what will be taxed and the dollars that won't be. You've got to separate them into two groups, taxable and non-taxable. All right, now we'll go back to the problem. Oh, and I'm going to work problem, I think the best problem to work first is the hardest. It's not the hardest one, I think it's the best one, but it's the last problem assigned. It's problem 13-4. You'd think it'd be the hardest, but I don't think it is. I think it's the easiest and the best problem. That's why I'm going to do it first. I'm going to do the last problem assigned first because I think it has the best overview. All right, now I'll stop and set up that problem. Okay, as I said, we're going to work problem 13-4, and I think 13-4 is a wonderful introduction problem because it just takes you straight to the heart of what all these taxes are, and it's basically a payroll. We have B.D. Williams, D. Ray, K. Baker. We have, 6 employees here? 1, 2, 3, 4, 5, 6. Here's their name. Now here's the earnings to August 31st. Now I want you to know that if this is the earnings to August 31st, we have to assume that everything's been done on this. Here's the new earnings. You see, August, then September. This was again last month, and this is where we are right now. This is, in other words, this person made $6,800 January through August. But then in September, they made $800. But again, assume that everything's been done, all the payroll's been done, the Social Security tax has been taken out, the income taxes, all the pensions, whatever they wanted withheld. Now, our job is they're saying, I want you to finish this. I want you to come up with the withholding for the income tax. Now, they're going to call this FICA, and many places do this. When they say FICA, they really mean the Social Security and the Medicare together. I don't know that that's really correct, but I've seen it done a lot, so let's go with it. That's what your author does. SUTA, state unemployment and federal unemployment. Let me scroll down and show you, let's just read the problem. And it says again, let me see, I've got a marker here. Problem 13-4. The following is a payroll sheet. It says for the Otis Import Company for the month of September. Now it says the company is allowed a 1%, okay, 1% unemployment compensation rate. 1% unemployment, what did they say? The company's by the state. Okay, so let's take that by the state. All right. And then the federal unemployment tax rate is 0.8%. Again, 0.8%. And that's by the Fed. Federal unemployment. And the maximum for both is 7,000, as we said all along. That's true in this country. 7,000, it's from 0 to 7,000. Assume a 10% federal income tax rate. All right, 10% federal income tax rate. That's ridiculous, but again, they're really saying, let's make it easy on you. The federal income tax rate is going to be different for every one of these people. But they can't go back. We're in college, and we're not going to go into every person and treat them really. We would if this was a payroll class. You can take, again, a class just in payroll, and you can get into every employee, but we're at a higher level than that, and I don't mean that condescendingly. We're just, we're going to cover this chapter and then move on to other things. But anyway, assume a 10% federal income tax rate for all employees, and again, a 7.65. Do you remember that? That's going to be Social Security and Medicare. So on they call it again the FICA tax, FICA, whatever. on all employees to a maximum of $118,500. All right, which is exactly what was said. In addition, a 1.45% charge to both employer and employee for employees' wages. And yeah, they're just giving you, this is saying that of the 7.65, do you remember that consists of two things? 6.2% is again your retirement or, again, OASDI, and then 1.45, which makes that 7.65, you see where that ties in, is made up of Medicare. And the author is telling you here, he's saying, hey, remember that again, 1.45% of this is charged to the employer and the employee for wages above $118,500. Again, I kind of cut that one off, but again, he's saying to you, just remember that this rate is made up of two rates. One of them just goes up to, there's a threshold or a maximum of 118.5. The other one, he says, there is no excess. Again, for the Medicare, there is no 118,000. So he's giving us the overview. With that in mind, let's go ahead and actually, I'll scroll back and let's try and fill this in. I want to get it just right. All right, now I got to erase this just because this doesn't, he's no longer applying where it was. But all right, let's go back and jot down a few things. One, hey, what did he say? I think he said FUTA was 0.8%, and it was on the $7,000 max. SUTA, I thought he said was 1%, didn't he? Oh boy, now I can't remember. 1%, and it was on, what did I just say, on $7,000 max. The FICA tax had what, 6.2% in it, and it also had 1.45% in it, and it was on the first $118,500, but on this one, there was no limit, no limit. All right, income tax withholding, I do remember he said just make it easy and assume that everybody's W-4 indicated they had the same amount of kids and they had the same income, so pull out 10%. That one I'm pretty sure I can do pretty easy. Let's just do that. Okay, now remember, we're only going to calculate this on the new income because, again, somebody else has done this for the, it's already been done for these wages up to August 31st. We're just going to do it for September. Well, 10% of 800 is $80, all right? 10% of 700 is $70. This is withholding. This is income tax withholding. By the way, they combined it. You got to pretend that there's both what? Federal and state in this column. That's really, they're being pretty easy on us right there to tell us that. $1,100 is going to be $110 at 10%. $1,900 maybe $190, 10% withholding. $13,000, look at those, Daniels is making pretty good money. That's going to be $1,300, isn't it? $16,000, 10% of that will be $1,600. And we can add that up, and I don't know what it is. We'll add them up at the end after all this is done. All right, let's see if we can do, now these are a little bit harder. Let's do the easy ones. Let's do these two first, SUTA and FUTA. Now remember, only people that have made between $0 and $7,000 pay these. Has anybody made more than that? Well, a lot of them have. Look at Kingston, he or she, Daniels, he or she, Lopez is above that, Baker's above that. All four of these people are above the 7,000. So we can just go over here and say 0, 0, 0, 0, 0, 0, 0, 0. Because they're above the $7,000 threshold. They don't have to pay any. Now let's take a look at B.D. Williams. B.D. Williams, as at 6,800, well, he made $800. That takes him to what? 7,600. That's above the threshold. He doesn't have to pay tax on all that. In fact, out of the 800, we can say that again, how much is it going to take him to get up to $7,200? Remember, he's got to get up to 7,000 is his threshold. 68 to 7, that's $200. $200 times 1% is, I believe, just $2. $200 times 0.008% is $1.60. All right? How about this guy? Let's say this is Donald Ray. Donald Ray's making 65. He's below the $7,000 threshold. But look, the $700 puts him over it. Well, in this case, he's really made, if you take 65 plus 700, he's made $7,200. But he's not going to be taxed on all that, just, again, up to 7,000. So again, we would say, all right, if we're going to tax him up to 7,000 on this, and we know this will take him beyond 7,000, we're just going to do the what? The $500. $500 times 1% is $5. $500 times 8% is $4. There we go. We got SUTA and FUTA done. This one I can add up. That's clearly $7. This one is $5.60. All right. Now this one's going to be harder. I guess I will have to have a calculator to do this. All right. Now let's kind of think. We know that this one has a very high limit, a very high threshold or high maximum, 118. Let's go back and look at what these people have made. B.D. Williams is way below 118. So's D. Ray. So's K. Baker. So's F. Lopez. Uh-oh, this guy's getting close, Daniels. Well, these first four are so far below 118, and let's see, they're not making that much. They clearly are not anywhere near this threshold. So we can simply really do a shortcut. We can just say, let's just take the 6.2 and the 1.45, add them together, and then multiply it by the $800. They're going to be exposed to both these taxes. They're not anywhere near the limit. So again, I'll take 68. Whoops, I'm not going to do that. I'm going to take $800, and I'm going to take it times 7.65. So $800 times 0.0765, that is $61.12. $61.12. Now this guy too, he's not anywhere near this $118,000 limit. So he's going to be exposed to both the OASDI and the Medicare. So again, let's take both of those and make it, I'm adding them together, 7.65, and multiply by $700. Don't do it on this number because they've already pulled the tax. Whoever worked here before you, whoever worked on the earnings to August 31st has done all that. We're just responsible for doing the newest payroll. So now we take 700 times, what did I say, 0.07, what was it, 765, right? And that is equal to 53.55. I'm going to draw a little arrow up here for me. 7.65% is the combined rate, just for me, 7.65. What do we got here? This Baker's nowhere near the limit, so we're just going to take the 1100, take 1100 times 0.0765, and that is $84.15. And then we're going to take Lopez. Lopez, 1900, nowhere near the limit. He'd have to be 118,000, nowhere near. So let's take 1,900 times, what did I say, 0.0765 is equal to 145.35. Now this one's going to get harder. This one's going to get a little bit harder. Do you see both of these are more, 107 is getting pretty close to 118,000. And if you add in his current income, 107 plus 13, well, that's going to be 120,000. That breaks through the threshold. All right, now we've got a problem because not all of the $13,000 is taxable, only part of it. The easiest way to get it is if you know that the 113,000 is going to break through the threshold, just do this. You know the 118,500 is the threshold, is the max, and you're going to pay taxes. That's the max you pay. So take 107 from 118,500, and you're going to get, I believe, 11,500. And let me write that down here. Let's do it this way. Let's say, all right, OASDI for, again, Daniels will be, let's take 118,000 500 is the max, minus, he's already made 107,000, so his exposure is going to be, if you take that, that's 11,500, and we're going to take that times 0.062%. That'll give us the OASVI. Now let's do the Medicare. And the Medicare is there's no cap, so it's just all of the money, and that means, again, the $13,000. All of the $13,000 is taxable, times the rate, what was it, 1.45? It'll be 0.0145. And if we do that, let's get it real quick, 13,000 times 0.0145, that's $188.50. And this will be 11,500. Do you see what we're really saying? 11,500 out of the 13,000 is below the threshold. 11,500, again, out of the 13,000 is below the threshold, so it is taxable. So let's put in the 11,500 times 0.062, and that is $713. And then let's add those two. And that's $901.50. All right, and I'm going to put that in green because it was a hard calculation. $901.50. All right, why don't we use another colored pencil, and I'm going to do, Kingston looks like he's in the same shape or she. Let's go up here and see what happens to Kingston at 112, 16 is not going to take him to 128. 128 breaks through this limit. But do you see that 112 is below the limit? What we've got here is a situation where their pay, part of that pay is not taxable, part of it is. And again, I'd say the easiest way to do it is say, all right, let's do the OASDI. And we know the max on that is 118,500. We know they're going to surpass that. And they're right now, they were last month at 112,000. So we'll say, well, 112 from 118, that's 6,500. What we're really saying is of this 16,000 they're going to make, of the 16,000 they're going to make, only 6,500 is taxable, because if you take the 112 that they had made plus the 65, you're up to the 118. Now take that times 0.062, and then take the Medicare, and remember the Medicare has no limit, so you take the entire payroll, 16,000. Okay, before I cut out, I just did some addition here, that's all you missed. Remember the two computations for, again, Kingston? You know, when we did these two computations, I did both of them, I did the math, and it came out 635. So Kingston's going to have, I put it right here, 635 in red. Remember the other Daniels gave us some trouble, he or she? We did that one as 901.50. Then I added these columns up. There's all the taxes that I have to remit to the federal government for Social Security. Here's all the taxes I have to remit to the state for unemployment and to the federal government for unemployment. Here's all the taxes that I have to remit to both the state and the Fed. Some of those are state taxes, some of those are federal. $33.50. Now what they asked us in this problem was they said, make the journal entries. In other words, right now all this is business. I mean, these are business. Now I'm going to put in a little bit of accounting. As if this wasn't hard enough to do the business part of it, the accounting adds the journal entries, which makes it more complex. But let's go ahead and do the journal entry. First of all, here's the September. There's the wages. So we're going to debit something like this. Wages, expense, and that's going to be for $33,500. Oh, poop. Let me back that up just a little bit. $33,500, isn't that what I said? 33,000. And I'm going to put this over here. Wages, expense. Now, that does tell the story. That's exactly, let's pretend that you and I work for this business. Remember what they were called? I don't. Something like Aussie or something. I don't remember the name of the business, but Anyway, they're going to go ahead and make a journal entry for this is the employees, the people who work. And those people made $33,500. But do you remember again, you never get $33,500. The employees won't get that. That's their gross pay. We got to take out all the things to get to net pay. And we've got them right here. Let's do those in a red since they're not going to get them. First of all, this is going to be withheld. $3,350 is going to go to the federal and state governments. So we're going to put Fed and state, and let's call that income tax. And this is going to be payable. You remember this chapter's on liabilities, and that's what it is, $3,350. Also, we're going to withhold from their pay the Social Security, and we're going to withhold $1,880.75. So how about we just do this? Let's do this. Let's call that the FICA payable. Again, a liability. $1,850. Is that what I said? Ooh, way off. $1,880.75. $1,880.75. There's no cents on this. There's another thing we're going to withhold. No, we're not going to withhold SUTA and FUTA because those you don't pay. The employer does. So I believe we're done. Is that it? Federal, state. I don't know why I thought there was something else. I wonder if they had any pensions or anything. Okay, we got the income tax, got that. FICA tax, we got that. Let me just scan down one real quick to see if they gave us anything else that was unemployment, maximum. I don't see any pension or anything else like that withheld, so I think that's it. I think we're done. I wish I would have done that because now I've lost my lineup. Let's see if I can get back down and get them where they belong. That's about where they were. Yes, they were there. All right, that's the journal entry, but we need one more thing. We need to say the net cash, credit cash. That's the amount they're going to send out. That's your net pay. And your net pay is going to be, I don't know. The net pay is going to be $28,000. Let's see here, $28,000. I wrote it down. $269 and 25 cents. Now you might say, well, how did I get that? Well, you just take the wages and subtract these two out because you're not going to get those, and you get the $28,269.25. Again, the wages that you're paid, less your withholding, gives you the cash. Now there's another journal entry, and this one's just negative to the employer. The employer, remember, the employer has to match. The employer has to match the Social Security, and then the employer has to pay SUTA and FUTA. So this one comes, this is the journal entry for the employer's payroll taxes. And this one you can debit some kind of expense. Let's just do, payroll tax expense. And I don't know what it's going to be, but I know one thing. This credit is identical. This is going to go to the Fed and state payable. Fed and state, that's in payable, and it's going to be exactly the same thing. $3,350, because they're matching it, you see? And they owe that. The employer owes the same thing. Even though the employer is really going to take that out of your paycheck, that's your money. That's your money that they're going to withhold from your paycheck and send on to the federal government and state government. This is money that's coming from the employer. The employer is actually paying this out of their own cash balance. Then we're going to have to pay SUTA, payable, and FUTA, payable. And those are $7 and $5.60. So I'll put $7, and that's I hope I got the right one there. Is that SUDA? SUDA is the 7, and the FUTA is $5.60. Now, if I add this up, $33.50, $7, that's going to be $3.50, $3.57, $3.60, $2.60. I think that's right. Let's see, if you add all, if you add all of them up, oh, I added the wrong one. Yeah, I should have put that down there. I should have put here, oops, I made a mistake. Yeah, they're going to match, but they're going to match the FICA. I wrote down the wrong thing here. Okay, this is going to be FICA that they match. They don't match, income taxes. FICA payable. And the FICA payable is going to be 188,188,075. Now, these three together are going to be added up to be the payroll tax expense. Take $1,880.75, $7, $5.60, and I wrote it down here. That should add up to 1,893.35. You see, there's your debit for the expense. There's what they have to pay. In other words, they're going to debit expense. They're going to write a check to the federal government for Social Security. They're going to write a check to the state government for unemployment, to the federal government for unemployment. So they really will have to write, they really might only have to write 2 checks. They'll probably have to write 1 check to one federal collection agency, and then they'll write another check, so 2 checks will go out here. Up here, they'll have to write out hundreds of checks to the employees, or there might be 100 employees in there. Then they're going to have to write out 1 check to the Fed, another check to the Fed, or maybe just 1 check to the Fed and 1 check to the state government. But I think these all work, and that is the answer to this problem. That gives you a good overview to, again, income taxation, or the taxation of payroll. And we're going to do a lot of problems on this because it really takes a lot of practice to get good at it. It's very detailed, but this is a great introduction problem. I don't think I have anything else that I want to do, so I think with that I'll shut down here. This is Accounting 113. I'm now going to do exercise 13.7. This isn't exactly, again, it doesn't parallel the schedule perfectly. This is on the schedule, but it's not the order. I'm not following the same chronology that I listed. Again, I mentioned that in the earlier video. I made a judgment call. This problem is a very different problem, and I think it's actually harder than the last one. It's just harder to kind of figure out the information. This is, again, we're working a problem. This is on payroll taxes. It says prepare the necessary journal entries for the wages and salaries of this company. It says the name of this company is the Green Day Hardware Company. I'm going to guess the author likes that band Green Day, or it could just be a coincidence. But anyway, this is the company's payroll for November 2017, and it's summarized below. Let's take a look. We've got factory workers, sales workers, and administrative workers. Their wages, they've earned $188. Now here they're saying the same wages, these are the same wages. They're putting them in a column to tell you that these wages are subject to the Social Security tax. They're referring again to, OASDI, the 6.2%, and they're referring again to Medicare, which is 1.45. And again, they're saying that these wages should be subject to both of these. Again, the Social Security. Now look what they've done. This is nice. They've actually already done some work for us. They come over here and say, look at the unemployment tax. See, it says here the amount subject to payroll taxes. Why is it 120 here, 120 here, and 40 here? What they're saying is, do you remember for unemployment taxes there was a max of $7,000? Again, you only are subject to pay this tax, unemployment taxes, between $0 and $7,000. So out of the $120,000 of factory employees, only $40,000 is still below that. Do you see what they're telling you? That means that really what? $80,000 has already passed that threshold. So 80,000 of this has already paid the max, and only these are going to be subject to it. Even more interesting is that in the sales area, and this makes sense, the salespeople are probably paid fairly well. And the salespeople, there's only 4,000 out of a $32,000 payroll. 4 from 32, 28 have already been taxed. Again, they've already broken through that threshold. So 4 is all that's left. 4 is going to be below the 7,000. And look at the administrative. Why would it be they're not subject to anything at all? They're saying all of their money, they've already exceeded the 7,000. That's because they pay themselves so much. They're probably sitting in there having a smoke and a cigar and laughing about it. Ha ha ha! We pay ourselves so much, we don't have to worry about the old, unemployment taxes. We're way beyond that. The lesser paid people, again, are lower, so they haven't broken through that threshold as quickly. Our job, it says, is to prepare a schedule, A and B, and I'm going to do them together. I'm going to do them together. I'm going to go ahead and do factory A and B together. But it says prepare a schedule showing the employer's total cost of wages. You know the total cost of wages. It costs for the wages. It costs because the employer has to match the FICA, and the employer pays for the Fed and the state unemployment. So we're going to have to get all those. All right, starting with that, let's go ahead and try and do it. If we want to do the total, and by the way, we're doing this for the factory first. Let's do the factory first since they're listed first. And I'd say, all right, if we want to do the total cost, let's just do wages. And that's $120,000. The employer is going to pay that. Now, how about the next thing? How about the FICA tax? Let's write that down both ways. Let's do that OASDI, and let's do that Medicare. And again, they tell us, if you read this down below, by the way, I really didn't, but they tell us things that, let's do read it. At this point in the year, some employees have already received wages in excess to what the payroll taxes apply. That's what they're saying. They've already maxed out. Assume that the state unemployment rate tax is 2.5%. We can write that up here. Let's put 2.5%. This is a state that has that's kind of an average rate. The FICA tax rate is 7.65. We knew that. On an employee's wages from $118,500 and 1.45 in excess of $118,500. Remember, we knew that too. 6.2, there's a limit, but the 1.45 of Medicare goes infinitely. Of the $188,000 of wages, they're referring to that right there, subject to the FICA tax, 20,000 of the sales, they're going to hear sales, are in excess of the 118.5. Well, what they're saying is that of this 32,000, 20 has already gone above the 118. So they will not be that means take 20 from 32. Only 12,000 is going to be taxed at that rate. We'll do that later. We're going to do sales next. Federal unemployment tax rate is 0.8%, so we'll put that there, 0.8. After credits, income tax withheld, 16,000. So we've got the federal income tax withheld. Let me do, what is the cost? Federal tax, is that what they said? Oh, income tax withheld, 16,000 for federal tax. Let's just do away with that and just do income tax. I shouldn't have done that. Income tax. And they just tell us straight out, that's 16,000. Let's just kind of do a summary up here, 16,000. OASDI, we know that that's what, 6.2%. But do you remember, again, all of it? They say that all of it, all of the 120, nobody's gone over the 118. It stands to reason. The factory guys probably aren't paid as much, the factory guys and girls. So they haven't exceeded, remember the 6.2 is a $118,500 limit. And they have not broke through that threshold. So all of that, we're going to take that times, let me see, $120,000. That's what they've made. All right, the Medicare is 1.45%, and we're going to take that times the $120,000 too, because that has a rule that all of it is taxable. There's no limit on, again, Medicare, no limit on that, but there is a limit on OASDI. All right, what else? We have federal and state unemployment, and they tell us nicely 40 and 40. So let's just do, again, FUTA and SUTA. And by the way, I haven't done that multiplication yet, but we know it's 40,000 each time. Now remember, I know you're saying, well, why isn't it 120? Because remember, they're really saying that 80,000 is over the max of 7. So only 40,000 is below it. That's the only taxable amount. So 4 times 8, really 0.008. Let's do it to decimal, 0.008. And this will be times, what's the other one? 2.5%, 0.025. And I don't know what that's going to be. 4 times that, I think it's going to be $320. This will be $320, and then I think that's going to be $1,000. All right, and I do not know what that other one's going to be. Let's see. Let's see. That's going to be 6.2% times 120 is 7,440. And 120 times 1.45% is 1740. 1740. And that is everything. 1, 2, 3, 4, 5, 6. All right, now that we've got that, let's go back and look at the question. We've calculated everything, but it says prepare a schedule showing the employer's total cost of wages for November by function. Well, we're starting with factory. It's the employer's total cost of wages by function. Well, they're definitely, the employer's going to pay this. The employer's going to pay, let's do it this way. Let's just take them right down here. The employer, it's going to be $120,000. The employer will pay that. The employer has to match the OASDI, so let's move 7,440. Medicare, the employer has to match that, so that's plus 1,740. Income tax, no, you pay that. The employer doesn't. You pay that, the employee. FUTA and SUTA, the employer does pay. So that's plus 320 plus 1,000. And I don't know what this adds up to be, but 130,500. 130,500. All right, got it. Now let's go back. That's the answer to A. This is what it costs the employer. Let's put that ER. The employer is going to pay, this is for your wages, this is for the match, this is for FUTA and SUTA. So 130,500, 130,500. All right, now let's do a journal entry. All right, what's the journal entry for the employer? The employer is going to debit what? Wages, expense, and that's going to be, let's see here, 120,000. And then the employer is going to credit, let me see, we'll just do OASDI, payable, Medicare, payable. You can combine these two. If you look in the answer manual, your authorized does. Income tax, this will be income tax payable. That's going to go to the state and the federal government. And then don't put FUTA and SUTA because this is your pay. This is the employer's giving you 120, but all this is being withheld from your pay. So we're going to credit these. And OASDI payable is 7,440. Medicare payable is 1,740. Income tax payable is 16,000. And guess what? The last one is. The last one is our plug. You got to go to cash. That's going to be the paychecks that you get written to you. And to get that, you're going to take 120,000 minus 7,440 minus 1,740 minus 16,000. And that will be, I don't know what that's going to be. Let me check my other cheat sheet. That will be 94,820. 94,820. There has to be another journal entry here, though. Doggone it, there has to be another journal entry because the employer, this is again really the employer. Let's put a big double E here. This is the employer paying you, the employee, and these are withheld from your wages, and there's your net pay. Let's do the journal entry for the employer now, and the employer is going to do the same thing. They're going to probably debit something called payroll tax expense. And we know it's going to consist of the match. It's going to be OASDI payable. It's going to be Medicare payable. And it's going to be, that's it. Yeah, oh, Medicare, oh, and FUTA and SUTA, I forgot. We got to do FUTA payable. FUTA payable. And SUTA. And I do these first just because I don't know what the total adds up to. I do know these two, what are there, 7440. That's 1740. The FUTA is 320. And the SUTA is $1,000. Add them all up, and again, I'm not sure what they add up to, 10,500. So this will be $10,500. Payroll tax, that's what the employer pays. That's what you never see. That's why employees sometimes like to pay you with cash. If they pay you with cash, they don't have to pay this. Do you see that an employer has to pay a lot of extra again to the U.S. government? This is the journal entry for the factory. Now let's go ahead and do B. Let's move to the other side of the board. And again, let me see if I can arrange this. We're going to do the same thing. All right, now we're going to try and do the exact same thing. Only we're going to drop down and do it for, again, sales. By the way, this was A and B. A, they asked us to do the schedule to show how much it costs to pay the employees $130. By the way, that should tie out, does it? You see 130? 120 plus the 10.5 is the 130,500. You see how that ties together? I honestly, oops, I'm out of the picture. Let me show you that again. We did this over here for factory. We're going to do the exact same thing now for sales, but I did want to say, do you see in the first part they said, what's the total cost to have employees? 130,500, 130,500. But you see there's the wages and there's the extra payroll taxes. Do you see 120 plus 10 ties to that? So that's a nice part of the problem. I honestly didn't notice that when I was working it. But it is a very nice tie. And I don't mean the kind you wear. Okay. Let's see if that'll give me enough room. All right. The sales wages. Well, let's again put this, try and do it kind of the same way I did over here to replicate this. Let's put at the top sales. This is for the salespeople. And let's do part A. Yes, it did. They're subject to all the same taxes. So let's go over and get the FICA taxes first. It says they're exposed. Look at that. It says they should be taxed on $32,000. But this one's a troubling number because remember, there's two components of it. In other words, it may be, they absolutely, every dollar is exposed to Medicare. There's no limit. But we really have to know, is there a limit again, for the retirement, the OASDI. Well, do you remember earlier it said, right here, of the $188,000 subject to the FICA tax, $20,000 of the sales wages is in excess. So here's where they tell us, of the sale, of this 188, 20,000 of the 32 is in excess of the 118.5. So we really have to say, all right, then really this has got two components that, again, are just out of this 32, 20 has already reached the, gone past the 118,000. So 20 from 32 is 12. So we really want to say, all right, so for, how do we do it over there? We'll do OASDI, and how about we do it this way? There was 32,000 in wages, but they said 20,000 had already been, had gone past the $118,000 threshold. We'll take that times 0.062, and that will give us how much OASDI there is. Then for Medicare, that one is the full 32,000. You remember why? Because again, there is no ceiling. That's another name, sometimes they use the word ceiling. And that one's times 0.0145. And we can get both those numbers in a second. I don't know what they are right now, but that's Medicare. Then what do they say that the income tax? They just tell us the factory. They said for sales, they have $7,000 of federal and state income tax, and they just tell us that, and that's 7,000. So we'll just run that over, $7,000. And then we have the unemployment. And remember, out of the 32, only 4 is less than 7. And I know if you're new to this, you're thinking, what does that mean? Of the 32, only 4 is less than 7. But out of the 32,000, we can say that 28,000 of that, again, has broken through the threshold. It's broken through the ceiling. It's not subject to this tax anymore. Only 4 is below the threshold. So that's what we're going to pay taxes on. So we'll do, how did we do it over there? We did FUTA and SUTA in this order. FUTA and SUTA. And we said we'll just take, again, 4 and 4, 4,000 and 4,000. And the FUTA rate was, the federal rate was 0.8 times 0.008. And then times this, 0.025. And actually, that's just going to be, that's interesting. 30, I think that's going to be $32. And that's going to be $100. And I don't know what those other two are going to be, but I'll get them. Really get it. Let me see, that's going to be $744, 744 when you multiply this out. The 32 times 1.45 is going to be 1740, 1740. And I believe that is everything. Let me see, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, I got it. All right. Now, it asks, once again, what's the total cost to pay employees? All right, let's go back and do it the same way. The total cost. What do we pay employees? Well, we pay them their wages. That's $32,000. We pay them that. Make it to the side. Do we have to pay, again, the employer? The employer has to match these two. So they have to match the 744. They have to match the 1740. They do not have to pay federal and state. That's your personal income tax. They do have to pay FUTA and SUTA. So that's plus $32 and plus $100. So the total cost to run the payroll is going to be, oh yeah. Did I get that right? 744. Hold it. I think I read from the wrong one. Sales wages. That's right. 744 is right. This is wrong. This is right. That is right. This, I just read the wrong thing. It should be 464. Doggone it. Okay, that should be 464. So that Medicare, we got to replace that right here. So 464. All right. So let me see. The one, let me see. Then this is going to be 32 744, 464, 32, and 100, and that adds up to $33,340. All right, do we have our version 432? Yeah, that's it, that's the answer. So that's the total cost of the payroll for the sales staff. Now we got to make a journal entry for that. And the journal entry, let's see if we can do that real quick. All right. The journal entry, let's do this. Wages, expense. And the wages expense is going to be $32,000. Okay, and then you're going to have to withhold this OASDI in Medicare. You withhold that. You withhold the Fed and state income tax, and that's everything. And the OASDI again is 744. Medicare is 464. Fed state income tax is 7,000. And then you have to take these and subtract them. And you remember again, we're going to say this is how much you get to take home, your take home pay, cash. And that's basically going to be the $32,000 minus these three, 744. Minus 464 minus 7,000, and I think that is going to be 23,792. 23,792. Yeah. If you take 32 minus 7, that would get you to 25. That'd get you about down to 24, 23. Yeah, that does make sense. So you grossed 32. You're only going to net 23,792. One more journal entry though, and this is the journal entry that the employer doesn't want to make. The employer doesn't want to make this journal entry because this is the journal entry that again costs the employer more money for an employee. And that is for the payroll taxes. Remember this is the EE. The employee is paid this money and this is taken out of their pay. Now let's do the employer. And again, we'll drop down here and we'll do payroll tax expense. Now, I really don't know what it's going to be, but they're going to have to match the Medicare and the OASDI, and they're going to have to do FUTA and SUTA. So let me just do all those. Let me drop in here. Let me see. OASDI, Medicare. FUTA, SUTA, and OASDI, we already said that was going to be 744, that's their match. They match Medicare, that's going to be 464. The FUTA and the SUTA is not a match, they have to actually pay that for employment, 32. And 100. If you add those up, you're going to get 1,340. 1,340. And that is these all added up as your payroll tax expense. 1,340. That's part A and B, and it's the sales. Now there's a part C to this problem, or not a C, but we should do the administrative too. But the administrative is the easiest one. As you can see, the administrative, the administrative, I believe they're completely, they have to pay tax on all 36. They have they've broken through the $7,000 threshold, so they don't have to pay any tax there. Anyway, I did put that on Moodle. The answer is on Moodle, actually. If you want to go, you're responsible for it. I'm basically saying you're responsible for it. You do it. I know how to do it. But anyway, since we've done the first two, I think you can do the next one. Let me see, Part A, Part B. Sales wages, okay. Again, yeah, just to show you it's posted. I don't know if you can see that, but that's Yeah, the administrative wages. So that'll be posted on Moodle, so you can go see that part of the problem. Anyway, that's exercise 13.7. We're concluded. But again, there is a part C. You're definitely responsible to do C, but I'm not going to do it because I feel like we've already done the hardest part. C is good. It's good for you. You're young. You should practice this. It's not good for me. I'm old and close to dying. I haven't got any time left. I could fall over dead right now. Anyway, we'll cut off there for tonight.